This is Tom Mitchell, Financial Times Beijing bureau chief. Before joining FT, Mitchell worked with South China Morning Post, Hong Kong's leading English-language newspaper, serving as a deputy business editor for 3 years.
I think the biggest contribution is simply the access to China's financial markets through Hong Kong. So when I started working at the South China Morning Post, the big benefit that Hong Kong got from China's financial and economic development was the Chinese companies that were coming to list in Hong Kong. Initially the red chips and later the 8 shares, and that was really the only way if you wanted exposure to Chinese stocks. Since then, we've seen the opening of the Shanghai Connect, both for shares and now bonds. And so Hong Kong as a conduit through which you can buy equities and bonds is probably far and away the biggest advantage Hong Kong has got from its position.
The city has survived several financial crises, but the greediness of day traders and retail investors hasn't changed, and no one has a better understanding than the local business radio host.
Since these 20 years, we have walked through the Asia financial crisis, the dot-com bubbles, and then the financial turmoil in 2008. And once again, recently, we have 2015, the Asia booming and collapse in a short period of time. But the retail investor has its nature to get risky return, but they have no risk control.
In the past 2 decades, Hong Kong has gone through several ups and downs. Does the Pearl of the Orient still have its luster intact?
It's become extremely expensive, basic living costs, but real estate primarily. So if you are coming out of college today compared to someone in Hong Kong graduating 20 years ago, your sense of opportunity will be a lot smaller simply because it's that much harder for you to conceive ever being able to buy a property or send your kids to a good private school if that's what you want to do. The other big problem is the lack of political development, which has so many wider impacts on the city.
But opportunities still lie within reach. Innovation would be key, and intensified competition seems inevitable.
Hong Kong has many competitors. Singapore, Shanghai, Tokyo, and in the next 20 years this competition will increase. One day the renminbi will become convertible. Will Hong Kong still have the place it has now when the renminbi is convertible? So I think Hong Kong is in a strong position, but to retain this position that it has now, she needs to be very innovative. She needs to have new products, new services, and she needs to be very nimble and watch what the other cities are doing and be ahead of them.
While the Belt and Road Initiative and Greater Bay Area give a promising future to Hong Kong, the economy is still dominated by finance and real estate, with technology and innovation lagging behind. Cyrus Ip, CGTN, Hong Kong.